Hey, what's up everybody? It's the investors community and welcome back to the channel. Today, we're diving deep into SMCI stock. This company has been making waves in the AI space and its stock has seen some serious volatility. Before you even think about hitting that buy button, there are three crucial things you absolutely need to know. We're talking potential red flags, competitive landscapes, and what all this means for your hard-earned money. So, if you're looking to make an informed investment decision, you definitely want to stick around for this one. If you enjoy our content, be sure to hit the like button and subscribe for more valuable insights. Alright, let's kick things off with some potential red flags that have been waving around SMCI lately. These red flags are not just minor concerns but could have significant implications for the company's future and its investors. Now, transparency is key in the stock market, and SMCI has been raising some eyebrows with its financial reporting. Investors rely heavily on accurate and timely financial information to make informed decisions, and any deviation from this norm can lead to a loss of confidence. It all started when their auditor, Ernst & Young, decided to part ways with the company. This kind of split is often a red flag because it can indicate disagreements over financial practices or concerns about the company's financial health. Not exactly a glowing endorsement, right? When a reputable auditor like Ernst & Young walks away, it sends a strong signal to the market that something might be amiss. And to make matters even more interesting, SMCI delayed filing its 2024 annual report. Timely filing of financial reports is crucial for maintaining investor trust and regulatory compliance. Now, delays happen, but this one, coupled with the auditor resignation, definitely raised some concerns among investors. The combination of these two events can create a cloud of uncertainty that is hard to ignore. See, when a company can't get its financial statements in order on time, it can be a sign of deeper underlying issues. These issues could range from internal control weaknesses to potential financial mismanagement. And the biggest concern stemming from all of this is the risk of delisting from the NASDAQ. Being delisted can have severe consequences for a company, including reduced liquidity and a loss of investor confidence. Basically, if a company fails to meet certain listing requirements like, say, timely financial reporting, the exchange can delist their stock. This is a measure to protect investors and maintain the integrity of the market. This means their shares would no longer be traded on that major exchange, which can make it significantly harder for investors to buy or sell the stock, and often leads to a drop in price. The reduced visibility and accessibility can also deter potential new investors. Now, SMCI did submit a compliance plan to NASDAQ, outlining how they intend to address these issues. This plan is a critical step in demonstrating their commitment to resolving the problems and regaining compliance. But let's be real, there's no guarantee that NASDAQ will accept their plan. The exchange will scrutinize the plan to ensure it is robust and feasible, and even if they do, the uncertainty surrounding the situation can make some investors hesitant to jump in. The fear of potential future issues can overshadow any short-term reassurances. To add fuel to the fire, analysts have been weighing in, and many are expressing concerns about the high chances of SMCI actually being delisted. Analysts' opinions can significantly influence investor sentiment and market reactions. They're also pointing to the unclear status of the audit being conducted by BDO, the new auditor on the block. The transition to a new auditor can be a complex process, and any delays or issues can exacerbate existing concerns. Until BDO gives the all-clear, that uncertainty is going to continue to hang over SMCI. Investors will be closely watching for any updates or signs of progress. This whole situation is a classic example of why due diligence is so crucial before investing in any stock. Thorough research and analysis can help investors identify potential risks and make more informed decisions. You need to look beyond the hype and really dig into the company's financials and any potential red flags. Understanding the full picture can help you avoid costly mistakes. Remember, investing in a company with accounting issues is like building a house on shaky foundations. The risks may not be immediately apparent, but they can lead to significant problems down the line. It might look good on the surface, but it could all come crumbling down if those underlying issues aren't addressed. Always prioritize financial health and transparency when considering investment opportunities. Now let's move on to the second crucial thing you need to know about SMCI, the competition. SMCI operates in the AI server market, which is projected to grow at an insane rate. The demand for AI servers is skyrocketing as more industries adopt AI technologies to enhance their operations, from healthcare to finance, and even entertainment. But here's the thing. It's not exactly a walk in the park. The market is fiercely competitive, and the stakes are incredibly high. SMCI is going head-to-head with some industry heavyweights like Dell, HPE, and IBM. These companies are not just well-known, they are titans in the tech industry with decades of experience. These companies have been around the block, they have massive resources, established customer bases, and they're not afraid to innovate. Their R&D budgets alone can dwarf the entire revenue of smaller competitors. One of SMCI's key selling points is its liquid cooling technology, which helps keep those powerful AI servers from overheating. This technology is crucial for maintaining server performance and reliability, especially as AI workloads become more demanding. And while analysts acknowledge that this technology is impressive, they also point out that it's not exactly a unique advantage. Other companies are also investing heavily in similar technologies. Dell, for example, has been making serious strides in liquid cooling as well, and they've got the financial muscle to back it up. Their extensive R&D efforts ensure they stay at the cutting edge of server technology. In their latest earnings report, Dell absolutely crushed expectations, demonstrating their dominance in the server market. This kind of performance makes it clear that they are a formidable competitor. This brings us to a critical point. Increasing competition can put a serious dent in SMCI's profit margins and growth potential. When competitors are performing well, it becomes harder to capture market share and maintain profitability. When you have giants like Dell breathing down your neck, it's not easy to maintain premium pricing or grab market share. The pressure to innovate and reduce costs is relentless. And let's not forget about the other players in the game. The competitive landscape is crowded and constantly evolving. HPE and IBM are no slouches either. They have robust portfolios and are continuously enhancing their AI capabilities. They've both been investing heavily in AI and are constantly coming out with new products and services. Their commitment to innovation ensures they remain relevant and competitive. The bottom line is this: SMCI is operating in a highly competitive market, and investors need to be realistic about the challenges they face. The market dynamics are complex and require strategic agility. It's not enough to simply have a good product, you need to be able to outmaneuver and outperform some of the biggest names in tech. This requires not just innovation, but also strategic partnerships, effective marketing, and operational excellence. Okay, now let's talk about the elephant in the room, SMCI's stock price. If you've been following the company at all, you know that their stock has been on a roller coaster ride lately. The ups and downs have been dramatic, leaving investors on edge and analysts scratching their heads. And that volatility is the third crucial thing you need to understand. It's not just a minor blip, it's a significant factor that can impact your investment decisions. The accounting issues we discussed earlier definitely played a role in the recent price swings. When a company faces such fundamental problems, it shakes investor confidence to the core. When news of the auditor resignation and the delayed annual report hit the streets, investors hit the panic button, and the stock took a nosedive. It was a clear signal that something was amiss, and the market reacted accordingly. Then, there was a bit of a rebound when SMCI appointed BDO as their new auditor. This move was seen as a step towards resolving the issues, but it wasn't enough to fully restore confidence. But let's be real, that was more of a temporary sigh of relief than a vote of confidence. Investors are still wary, and rightfully so. The market is still waiting to see if BDO can provide some much-needed clarity on SMCI's financials. Until then, uncertainty will continue to loom over the stock. The key takeaway here is that SMCI's stock is incredibly sensitive to news and speculation. Any development, whether positive or negative, can cause significant price movements. Any whiff of negative news, whether it's related to their accounting, competition, or the overall market sentiment, can send the stock tumbling. It's a precarious situation that requires constant vigilance. And speaking of market sentiment, it's important to note that the overall outlook on SMCI is pretty cautious right now. Investors are treading carefully, weighing the risks and potential rewards. While some analysts see potential in their technology, many are hesitant to recommend the stock given the uncertainty surrounding their financials and the competitive landscape. The tech sector is highly competitive, and SMCI needs to prove its resilience. This cautious sentiment is reflected in the stock's price, which is still trading well below its 52-week high. It indicates that the market is not yet convinced of a turnaround. This suggests that investors are waiting for more concrete evidence of SMCI's ability to overcome its challenges before jumping back in. They want to see tangible progress and stability. The bottom line is this: SMCI's stock price is likely to remain volatile for the foreseeable future. The road ahead is uncertain, and investors need to be prepared for the twists and turns. If you're considering investing, you need to be prepared for a bumpy ride and be comfortable with the possibility of short-term fluctuations. It's a high-risk, high-reward scenario that requires careful consideration and a strong stomach. So, there you have it, the 3 things you absolutely need to know before even thinking about buying SMCI stock. Now look, I'm not saying SMCI is a bad investment. They're operating in the red-hot AI sector, which has massive potential, but, and this is a big but, there are some serious risks involved. Before you even consider hitting that buy button, you need to thoroughly evaluate the delisting risk, the competitive landscape, and the stock's volatility. Ask yourself, are you comfortable with the uncertainty surrounding their accounting issues? Do you believe SMCI can compete with the likes of Dell and HPE in the long run? And are you prepared for the potential ups and downs that come with investing in a volatile stock? Only you can answer those questions. But hey, knowledge is power, right? And now you're armed with the information you need to make an informed investment decision. See you in the next video. Don't forget to subscribe to not miss out on more helpful videos.